Welcome back. With just hours left to file your 2014 taxes, a new study is out showing which Americans pay the most and which are off the hook. According to the Tax Policy Center, the top 20% of American earners pay more than 80% of all income tax and nearly 70% of all federal tax. Further, the top 1% pay 46% of all income taxes in America, 30% of all federal tax in America. John Hilsenrath, Marion Bartels from Bank of America Merrill Lynch back with me. And I guess these numbers are not surprising that the top earners pay all the taxes. But once again, we see this playing out.
Right. No, I don't think this is really any surprise, Maria.
Yeah, John.
Well, I think it matters in two respects. One is it's tax day. It's worth remembering who's paying the bills and who's not going to have a good week. But it also matters, I think, as we look forward to the 2016 campaign. When I look at numbers like this tells me that these redistribution arguments, they have a hard time resonating because the wealthy are already paying a lot of the overall tax bill. I think, as we were just talking earlier, that the 2016 campaign is moving towards issues of social mobility. How do you lift up people at the bottom end? What are the ingredients that economic policy needs to incorporate in order to lift up those people at the bottom 80% of the income scale who aren't earning the kind of income that you need to pay a lot of tax?
Yeah, you're absolutely right. And when you look at these numbers, you're getting a reminder of the ideologies out there in terms of, look, the left wants to raise taxes even further. The right is saying, look, no more tax increases for the rich. But, now there's an article in the Journal today I saw, John, about how some companies today are saying, I'm giving up on tax reform. I don't even think it's happening. So I'm just going to bite the bullet and bring money back from overseas, which is what GE is doing to pay for that $50 billion buyback. Right.
Well, you mentioned GE. The other part of the GE story that I think is fascinating right now is they're getting rid of all their financial asset businesses. We're seeing a huge transformation right now in the financial sector with the big banks shedding businesses and private equity guys, Blackstone and company, coming in and kind of moving all of this finance into the shadow finance part of the
I'm not sure how I feel about this right now, because I feel like on the one hand it was a very smart decision to sell real estate in this market. Look, real estate is expensive. You know that this is this market has been on fire, so why not sell perhaps maybe at the top? But at the same time, when you look at where the earnings have come from at GE over the last several years, it's been from financial services. So how is he going to make, Jeff Immelt, how is he going to make the earnings estimates if he doesn't have financial services?
Well, he's getting smaller. I mean, he's going to go off of a lower base. But I think the backstory there, and this again relates to the 2016 campaign, is the regulatory environment. The regulatory environment for big financial institutions, don't forget, GE Capital is a SIFI. It's a systemically important. Thank you for filling in the cracks on that. Financial institution, they want to get out from under that, so they're shedding these assets because they don't want to be as regulated as they have been.
Well, it's too bad to see companies actually being forced to sell and get out of certain businesses, Marianne, because the regulatory environment is what it is. I mean, that's not exactly, growth.
No, it's not growth in the sense that you're growing it organically. And I think that's why you're seeing an M&A activity pick up the way you are.
Right.
I think it also means that CEOs have confidence. So you have all this cash. What do you do with all of this cash? And a lot of corporate CEOs are finding restructuring their business and maybe doing appropriate acquisitions, because we're even seeing acquirers now go up. In my entire career, Maria, I don't remember so many companies announcing deals where their stock price went up. Normally their stock price goes down. So there's something to this that the market likes. At the same time, we're taking stocks out of the stock market and we're not replenishing them fast enough on the IPO market. So I still think a long-term supply and demand imbalance that's being created within the marketplace. And then when we work with our clients, I mean, I always go out when I'm talking to our clients, I say, does anybody in this room not want to grow their wealth? And everybody laughs, right? Of course, we all want to grow our wealth. Well, how are you going to do that? Are you going to do it in cash? You can't do it in cash. Should you rely on bonds to grow your wealth? Well, probably not. The last 30 years, you grew your wealth in bonds.
You've got to go into the stock market.
You don't have an alternative. Stock market is going to be one of the main ways. Not only will our clients be able to grow wealth, but they also want income. And that we're also lacking. We're not seeing yields on the bond market. A lot of our clients thought that they would get 5% risk-free on treasuries. That's not going to happen. So if they're trying to generate income, they have to find other pockets. We like munis, certainly on a tax-adjusted basis.
Real estate.
Real estate is going to be another pocket where they can grow their wealth.
Right.
But we think the stock market will be able to grow wealth and provide income at the same time.
I would disagree.
But there's going to be more volatility. I think this is the key, though. There's more volatility in the portfolio. Clients will have to take on a little bit more risk for that income and growth.
I think real estate is the one we have to look out for. If you look at what Blackstone is doing, they're putting their money on real estate, and they were astute enough to get out before the bubble burst.
Obviously, they were in a realization phase.
This comes back to that strong dollar story that we were just talking about. There's a lot of money coming into this country from places like China, places like the Middle East, looking for a safe home to park their cash. I think it's going into real estate, and I think it's going to keep going into real estate. I think
you're right. Real estate and the stock market, by the way. John Hilsenrath, Mary Bartels, thanks so much for your time today.
Thank you.
Great conversation. We appreciate your time, both of you. We'll see you soon. Coming up.